All right, welcome everyone. I assume you can hear the sound of my voice. If so, maybe you could signify some way. I see hands going up. That is always a good thing to see. And people can start speaking. Great, great. So what are we talking about today? Something fun, I hope. In the residential purchase agreement, I've been concentrating on how to fill out what you need to fill out, right? So I made a video called The Grid. And in the video that the grid, I go through, well, what's called the grid and how to fill it out and what are the issues that are generally going to come up, some of which we're going to talk about. Once you've done the grid, you're then confronted with property addenda and advisories. And the beginning of it is property type addenda. Now, I'm going to do a separate class on the probate agreement and probably a separate one on manufactured homes. God help me, but I probably will. Maybe not stock co-ops and tenancies in common. They exist in some places, but not as common. I'm going to probably talk about the tenant occupied property addendum today. But then there's the other addenda, right? There's the blank addenda, the backup offer addenda. There's a bunch of these other addenda. And then there's some that aren't even listed here. And so what I wanted to do was to start with some of these different addenda and when would you use them and why would you use them and what do you have to worry about and what do they mean, all of that kind of fun stuff. And I've included some samples of the different forms that are part of the handouts, which you can get, if you're looking for a handout over on the side. And what I like to start with is, what do I want to start with? Here, let me, I'm going to start with, there's an addenda or addendum. This is the blank addendum, which you can see on your screen. I'm going to do it this way. All right, why not? Which now you can see on my screen. All right, so there's the blank addendum, and you can number it, and you can then check what is this an addendum to. It could be a transfer disclosure statement, yeah. It could be a residential lease, but the default setting is the purchase contract. You could write in something else. And the beginning of this seems okay, right? There's a large area for you to write whatever poetry comes to your mind, and then the buyer and the seller sign it, and everything is simple, easy, no problems, right? Right, no problems. So what I wanted to do is talk about a scenario. Right, let's start with this. All right. Follow along, please. So you're in a contract, there's inspection contingencies, and the buyer would like the seller to give the buyer $10,000 credit towards closing costs. So in order to accomplish this, the buyer's agent writes up an addendum. And in the addendum, it simply says seller to credit buyer $10,000 towards closing. Buyer signs the addendum. Buyer's agent sends it to the listing agent and the seller. Listing agent and seller are not happy with the addendum, right? They go back and forth and arguing with each other. And so finally the seller says, I'll do $5,000, but that's it. I don't even want to do that. 5,000, and then I'm done. So now the listing agent and the seller write up an addendum. So remember, number one, that would be addendum number one. Notice there's a place for you to number the addendums. So they write up addendum number two. And in addendum number two, it simply says seller to credit buyer $5,000 towards closing costs. Seller signs the addendum. Seller signs the addendum. Now, once the buyer and the buyer's agent see that the seller is willing to do anything, give them some money, they decide, well, maybe we ought to split the difference. They'd really like more than 5. Okay, we're not going to get 10. So this is addendum number 3. Buyer then signs the third addendum, and the third addendum asks for $8,000 worth of credit. Buyer signs the addendum. So at this point, we have addendum number 1 only signed by the buyer. We have addendum number 2 only signed by the seller. And we have addendum number 3 only signed by the buyer. So now the buyer comes back saying, how about 8? And this really ticks off the seller, and the seller is cursing, and I'm not giving you a penny. It's nothing, no credit. You're getting nothing extra from me, right? So the buyer's agent gets this, phone call from the listing agent, said the seller's pissed off and isn't going to give you any money anymore, nothing. So now the buyer hurriedly signs addendum number 2, the $5,000 one, sends it back to the seller. So what we have here is addendum number 1, not signed by buyer but not seller. We have addendum number 2 for $5,000 that has now been signed by both sides. We have addendum number 3 that has only been signed by the buyer. So the question is, what's going to happen? Right, that's my question for you guys. I have no idea myself, but I thought here, the question is, what happens now? Now, you all should have an opportunity to see this. I hope I spelled everything correctly. What happens now? Does first choice, buyer gets the $5,000 credit? He's got a document that everybody signed. Second choice, buyer gets no credit. And I guess I shouldn't have made, all of these are possible. Lawyers are going to end up getting all the money. No one's going to get a credit. Does everybody see, did that poll come up like I was, people are voting. Oh, I like this. Lawyers are going to get the money is only running at 6% so far. All the lawyers have, I've said that. All right. So 67% of you said the buyer's going to get $5,000. 28% said the buyer's not going to get anything. What's the correct answer? And it's probably going to be that lawyers are going to get the money. And the problem is going to be is does everybody understand we have a mess right now? We've got a mess, right? Because there is one document that everybody appears to have signed. Now, what agents sometimes tell me is, well, whenever there's an addendum, shouldn't we say in it that this, cancels any previous addendums? People always say that, but I don't hardly ever see agents actually putting that words in. I see addendum 1, addendum 2, addendum 3, addendum 4, addendum 5, people going back and forth and negotiating the transaction through the use of addendums. This is a big mistake. And by the way, if you were ever visited by the Department of Real Estate or got involved in litigation and you got one addendum, let's say addendum number 5, like you've been going back and forth about the credit, 8, no, credit's too much, 5's not enough, 6, 7. So let's say at addendum number 5, they finally come to agreement on a number and everybody signs it. What about those other 4 addendums back and forth? Are those included as part of the document package, the history of this transaction? Or these things you're going to give to your broker, upload to whatever, we use SkySlope or, and the answer is, well, yeah, aren't you supposed to turn in all that paperwork? And if you ever ended up talking to the Department of Real Estate or to a lawyer, and all you had in your file was addendum number 5, but you don't have 1, 2, 3, and 4, they're going to be on you about what happened to those other 4 addendums. Where are they, right? So let me put it this way. This form is used for extra space. When do you use the addendum form? And the answer is whenever you've got a clause or something in the contract and you don't have enough space to write everything you want. An example might be seller agrees to make the following repairs. Or let's say in terms of an inspection contingency, buyer is removing most of their inspection contingencies, but they want the pool inspection, they want a foundation estimate. There's a list of specific things. In other words, this form, the addendum form, is not to be used to negotiate a change in the terms of the contract, but is simply going to be used to include additional information about something that already exists in the contract. Now, what should they have been using instead of the addendum form in order to negotiate the credit? They should be using the amendment and amendment of existing agreement terms, which you can also number. So an amendment is what you use when you're actually changing something in the contract, like adding a credit, revising the price, things like that. I can only see the quick poll. Sorry about that, guys. Let me go back. How about that? Sorry about that. Is this better? All right. So the addendum form is only used to add in stuff when we don't have enough space for it. The amendment form is the form that we're going to use when we're negotiating a change in the terms. You're welcome. A change in the terms. So for example, what would have happened is the buyer's agent would have written up something that says seller to credit buyer $10,000 towards closing costs, right? Notice that the amendment is actually written like it's an offer, in that, like most offers, there's an expiration. So you could check the box, the buyer, in this case, it would be the buyer proposes this amendment of existing terms, which may be withdrawn by the party initiating this proposed amendment at any time prior to acceptance. So up until if you change your mind and you say, no, 10,000 isn't enough, we want more, we take it back. And then it goes on to say that this shall be deemed revoked unless by 5:00 p.m. on the third day or by, and you can write in, just like in a purchase agreement, a shorter time period for them, the other side, to read your amendment and agree to it. Trick question. Yeah, I don't know. And then there's a place for acceptance. So the way that scenario should have played out is the buyer fills out this form, an amendment proposal to receive a $10,000 credit. Seller says, no way, right? And then the seller writes one saying 5,000. But notice all of these are things that could be withdrawn up until the point in which they've been accepted and the acceptance has been communicated back. They can be revoked, withdrawn, and you can put a time period on it. So we don't end up with 5 or 6. I mean, we might end up with more than one of these, but they self-destruct rather than just, stay there and fester on and on. Right. So you shouldn't be having a lot of addendum forms in your file. In terms of that blank addendum that you've written on, most of the time when I'm looking at agents' transactions, what I'm seeing really should have been amendment and not an addendum. Notice there's even a place at the bottom to say not accepted, right? So when the buyer asked for $10,000, the seller could have said, no, I ain't accepting that and send it back. That kills it. That one's dead. Then the seller could have said, how about 5, written up an addendum, which the buyer could have said, we're not going to accept it. Then that's dead, right? You understand this is the right form to use. All right. So what's another addendum that you might see a lot, but you can always hope. The TOPA form which is the tenant occupied property addendum. Now, changes have been made from that used to be the tenant in possession form, the TIP form. Now it's called the TOPO form. And one of the major differences was in the tenant in possession form, it was kind of left into the air whether or not the tenant was going to stay or whether or not the tenant was going to go. It really didn't explicitly explain that. But this form is a little bit different in that it makes it very clear whether or not the tenant is staying or whether or not the tenant is going. Now, earlier this year, I did a class with an attorney. The attorney did the class. I simply introduced the attorney and recorded it, that sort of thing. But anyhow, it's called, and it's on my YouTube channel, which is called Upthink Real Estate. For those of you that haven't found it yet, you should subscribe, right? You should hit the like button often and hit the little bell so you know every time I upload one. But anyhow, that video was called How to Sell Property with a Tenant in It. And the big issue is that under California law, there's something called just cause eviction. You can't just throw tenants out because you feel like it, right? There has to be they have to have done something that's on a list. There's like 15 things that would qualify as just cause. Let's see. So let me just see. Emily has a question. Does the seller complete not accepted first, then creates a counteroffer? Yes, you would not accept it, and then you would, it's not called a counteroffer, but you would write your own amendment. But it's not, I'm going to do a class on counteroffers coming up. So this is the issue with tenant occupied property. It is no longer legal to just say to the tenant, I want to sell the property, so I want you out. I want you out is not on a list of the things that constitute just cause to evict somebody. Now, if the property is being sold and the buyer intends to live there personally, that's on the list. But the California law says that the tenant has to be given 60 days notice, 60 days notice, which means that if you're writing an offer and it's tenant occupied property and your buyer intends to move there, that is a reason to throw the tenant out, but they're going to need 60 days, not from escrow closing, but from the date that the contract is entered into. So this is something you should be thinking about in terms of close of escrow and time of possession. Because if you're like, well, we can close in 21 days, my lender is on it, and then you're not going to be able to move in 21 days because the tenant gets 60 days to move out. So if you closed in 30 days and then allowed the tenant to remain for 30 days, you understand now you've met the 60 days notice. But you can't just throw them out. And even if so for example, if the buyer is buying the property to keep it as a rental, they can't throw the tenant out, the existing tenant, right? That's not a reason, right? There's a very specific list of reasons. And you have to give the tenant some money for relocation. Right. So by the way, if you're on the listing side and there's tenants in the property, this would be something, cash for keys, something that you might want to talk about before you put it on the market, right? Because it may not sell. And then there's always the question, all right, we're going to close in 30 days. We're going to give the tenant 30 days. That's the 60 days necessary for the required notice. Then we can kick them out and move in. What if the tenant doesn't leave at the end of 60 days? What if they're still there? What are you going to do? Close anyhow? And then evict them? Evict them first and then close, right? You understand this could be a mess. So what the form, however, hopefully is going to help us with this. I hope so. So first of all, it says tenant, any adult person other than the seller who's occupying the property, whether or not they are paying rent. So I've heard agents say, well, you know, it's a relative who's living there and he's not paying rent, so we can kick him out. I don't know what state you're from, but it's not California, right? That's actually what is, if you're preparing for your real estate exam, would be called an estate at will. And California, it's still a tenancy, and there still has to be notice. So 1A say tenants to remain in possession. Notice that's the default setting. Buyer shall take property subject to the rights of the existing tenants and under the terms and conditions specified in paragraph 2. What's the question? Is it best for the owner and the listing agent to make arrangements for the tenant to vacate the property before listing the property for sale? Yes. Yes. It is much better. It is much better to get the tenant out. Number one, the tenant probably does not want the property to sell, and therefore does not have any real motivation to be helpful. Number two, the tenant, because it's theirs, can keep you from showing it. They will keep you from staging it. They'll keep you from cleaning it. It's very difficult. If the tenant, they'll complain about open houses. They won't want to leave. By the way, they don't have to leave, right? I mean, well, we're showing the property, the tenant has to leave. Where does it say that? Well, it doesn't say that anywhere. That's not a legal thing. So the tenants don't have to leave. Almost every time, and I say this to all of the agents that I work with that have listings with tenants in them, get the tenant out. Have your client, the owner of the property, contact the tenant and just say, we're planning on selling the property. You're going to have to leave anyhow, right? Because when the buyer buys it, the buyer wants to live there, they're going to give you notice and you're going to have to move. So what I'd like to do is to make this as smooth as possible. You know, what's it going to take? You know, what's it going to take to get you to move out? And usually it involves money. Every time there's been a hassle, this is what I always hear. Oh, well, the tenants have been there for a long time and they're really nice. And the owner talked to the tenants and the tenant said they're going to cooperate and they're going to help sell it. Last time I heard that from the listing agent, within 10 days, there was a letter from a lawyer that the tenants had hired telling the seller all these things that they don't want them to do, right? If the tenant does not want you to sell the property and they don't want you to sell the property, how much is the seller going to lose in terms of sales price and time by having possession with somebody who's not cooperating? And I believe that in virtually every case, the seller would end up net more money if they gave some money to the tenant to get them out so that the property could be cleaned and it could be painted if needed and it could be staged and it could be sold as a retail sale, right? I'm just saying, get the tenant out. But if you can't get the tenant out, this form is going to be included in the transactions. Get the tenant. Is it correct that Section 8 tenants have 90 days instead of 60 days? Not sure about that. Not sure about that. The California law, I don't recall it saying that, but it says 60 days. Don't know, right? That's a good lawyer question. And by the way, if you've got tenants in the property, the reason why I did the class with attorneys is that at some point the seller may need an attorney. Property, so default is you're going to take the property and the tenant's going to be there. Or check the box, the property is going to be delivered vacant. The property or units. Now, the reason for this is that it might be a duplex, a triplex, or a fourplex. And sometimes the owner lives in one, but is renting the others out, and it's complicated, right? The owner says, well, I'm leaving, but the others are still here and they're still tenants. So it says the property, and you put in, or the units, if there are specific units, shall be delivered vacant without existing tenants. So this is a promise by the seller that they're going to get rid of the tenants. 2, if after exercise of good faith attempts and subject to applicable law, the seller is unable to remove the existing tenants by close of escrow, or, and by the way, I would check this box. So who's going to be filling out this form? It's the buyer's agent writing the residential purchase agreement, because there's a place in the RPA where it asks, is there a tenant in the property? And if you say yes, this form automatically loads. And rather than waiting to close of escrow to see if the tenants are out, I would check the box that says 5 days prior to close of escrow, so that you know whether or not they're really moving, right? Because, they may not be. Then it says that the buyer may cancel this agreement, and buyer's sole remedy shall be the return of deposits and buyer's reasonable out-of-pocket expenses for inspection reports and appraisal fees under the agreement. So if we say it's going to be vacant, but it is not vacant, the buyer gets their deposit back and they get what they've spent for the inspections and reports. What if the owner decides to rent the property under a higher rent lease? I'm not sure what you meant, or the buyer, you mean, what if the buyer, if under California law, the buyer is also, the landlords are limited by how much they can increase the rent, right? In addition to unjust or just cause eviction, there's also rent control, which essentially caps it about 10% a year. Right, I wasn't planning on going into all of that, but essentially it's the consumer price index plus a factor maximum of 10% a year. So what sometimes happens is that the occupant of the property is a relative who isn't paying much. And if that relative stays, you can still only raise their rent by a maximum of 10% a year. You can't just say, well, you're not paying, the market rate, so I'm going to double your rent. You can't do that. And you can't evict somebody because they won't agree to pay a higher rent when they're not obligated to. So in terms of what can you use to get rid of the tenant, they have to have violated the lease, not paying rent or running a meth lab or doing something. They have to have violated the lease in order for you to just throw them out. All right. But if they don't go, you've got problems. The only thing it says about the sale of the property is if the buyer is planning on moving in, then the buyer can give 60 days notice and the tenant has to leave. Right. So what a lot of times the buyers want is they want it vacant. They don't want the tenant there. But you want to make sure you check 5 days before close of escrow. And the buyer needs to understand that they may not move, in which case they're going to get their money back, but that's it. Or it says the buyers can elect to proceed with the transaction with the tenants in possession and evict them later if they want to, which of course very few buyers want to do. Even if pursuant to the agreement, seller remains in possession, no tenants shall remain. So this is like, especially if you have a fourplex or a duplex, you're giving the seller 2 weeks to get their money and make their move, but there's still another rental. Those are kind of treated differently. Tenant remaining in possession, additional terms. Now, some of this is simply what we're prorating, what is normal. So if the tenant is remaining in the property, that's what this is referring to. If the tenant is remaining in the property, then things like the deposit, the security deposit, all that sort of stuff shall be turned over to the new owner, to the buyer, and any rent and things like that will be prorated. There's also a paragraph about government compliance, and there's already attached is the rent cap and just cause addendum, which may impact people. You got to read that, right? The reason I did the class with lawyers is that if you've got questions about this, you should talk to a lawyer. The rest of this, I'm not going to spend a lot of time on all of this, but there's changes in personal property and seller documentation. If this is a multi-unit property, right? You're going to want to check income and expense statements, right? Assuming that they have them, right? If it's a, a condo that's being rented out, they may not have that. You're going to get copies of all those documents. You should also check the box for a tenant estoppel certificate. And what the tenant estoppel certificate is, it's a form that the tenant's going to fill out answering questions about the security deposit, lease, and what money they have to spend, right? Are they paying for garbage, electrical, that sort of thing. Now, the reason why this is important is, let's say the lease says the tenant is paying $4,500 a month. That's what the lease says, right? And up here, they're going to give you, the seller is going to give you copies of the lease, right? All current leases. The lease says $4,500 a month. However, what happened last year is the tenant went to the owner, now the seller, and said $4,500 a month is too much. They've just opened up some new places down the road, and they're bigger and they're nicer and they're new and they don't cost as much. If you don't lower my rent to $4,000 a month, I'm not going to stay. So the owner says, okay, just don't tell any of the others, right, that I've done this. $4,000, it's good. So the tenant is actually paying $4,000 a month, but the lease says $4,500. Now, you understand, if you're the buyer and you're looking at the leases, you're thinking, I'm getting $4,500 a month. No, that's not what the tenant is paying. So the tenant estoppel certificate asks the tenant, how much rent are you actually paying? And then you also have the question where the landlord says, well, they only gave me a $4,000 security deposit, but the tenant says, no, I gave him a $6,000 security deposit. Right, and so that's a document you want so that you can compare it to the leases and what the landlord is telling you. Seller, anyhow, that's enough of that, right? There are a lot of issues besides filling out the form, right? You need to understand the rent cap, you need to understand just cause eviction, and you need to know a lawyer. A backup offer addendum. Not going to spend a lot of time. I just wanted to go through the addendum. There's one that's a lot of fun coming up, which I'm saving to the end. Assignment. Ooh, that one generally is a lot more fun. But the law says that you ought to be presenting offers. If you're a listing agent, you should present offers up until the day escrow closes. Now, sometimes people find that sort of as a weird thing. So escrow is supposed to close on Friday and somebody makes an offer today. I'm supposed to present that offer to the seller. And the answer is yes, unless the seller has said, I don't want you to present any offers. Why would you keep presenting offers even when you're in contract? And let's say even though contingencies have been removed. And the answer is they don't always close. Now, my metaphor for a offer and an acceptance, it's like getting engaged, right? It's like being engaged. Do all engagements end in marriage? The answer is no, they don't. And if you were engaged, would you like to have, I don't know, backup offers, right? Would it be good to have backup offers, right? In case one falls through, right? Maybe a bench, So what's how long should you? So I had a buyer from Cisco and we're in contract. We were closing that day. It was like Friday. We were closing that day and I was listening to the news and in the morning, and I heard on the news that Cisco had announced layoffs. And I was like, ooh, right? Because my buyer, worked at Cisco. Well, apparently the underwriter for the loan also heard that news, verified employment with Cisco. And Cisco said, yeah, this guy's on the list. We're going to be, laying him off. Now, this was the day of closing. And the lender had actually already funded the loan. The lender took the money out of escrow, right? The loan had been funded, but we did not close. We did not close. because he took the money out. So how bad can it be? You know, up until the night, right? Some people run out at the wedding, right? They don't show up, or they run from the, I don't know, right? So that's why, unless the seller says, look, I don't want to hear it, backup offers, why not take one? Why not take one? So you can, it's not a difficult form, not a lot to fill out. What position do you have? One backup offer, two backup offers, whatever. Cancellation rights, buyer may cancel the agreement at any time before you're in contract. In other words, if the first one falls through and they've accepted yours and sent all that to you, up until that moment, you can change your mind and cancel. And if seller is unable to provide cancellations of the first one by, and you're going to put in a date, how long is your buyer willing to wait to see if the ceremony is going to go through? How long are they willing to wait? 2 weeks, 3 weeks, a month, whatever. Notice for deposit and time periods that within 3 business days after copies of the written cancellations and release signed by all parties. So the buyer in a backup offer doesn't have to put an earnest money deposit into escrow until the first offer has been canceled and they've been given notices of that. And time periods for all the contingencies, inspections, and whatever do not start until the buyer has been given copies of the cancellations and releases signed by everybody. That's when all the time periods. At what point do you provide the backup offer addendum? Do you disclose this on your first buyers as part of the disclosure package? All right, that's a good question. So, when we, usually this is negotiated in advance, right? This is negotiated in advance. And what that would mean is you, if you were the buyer's agent and it's a pending transaction and you're talking to the listing agent and he says, my guy really, really wants it, really wants it. Will you take a backup offer? And the listing agent says, let me ask, and then they come back and they say yes. So what that would mean that you would, so you've already talked to the agent about it. What that would mean is that once you've gone through the grid, sorry to be jumping around so much, but once you've gone through the grid, you would simply check this box that says backup offer, right? Backup offer, you check that box, that would add it. But let's say I'm the listing agent and I got 5 offers, yay, and we've already accepted one, but there's contingencies and things that I'm not all that sure about. And then you've presented an offer, but you did not check the backup offer addendum because you were hoping to be first place, right? You're not supposed to, you didn't want to be on the bench, right? You wanted to be in first place, but somebody beat you out. So I'm the listing agent and I called you and I said, we've already accepted a higher offer. However, it's got some contingencies. Are you interested in being in a backup position? You said, yes, absolutely. So now what we would do while I'm representing the seller, where we would get to acceptance, notice one of the choices is backup offer addendum. So usually the backup offer addendum is attached to an RPA when the buyer's agent has already discussed this with the listing agent and was given the thumbs up. Or if the buyer has made the offer and the seller is accepting it but in backup position, then they would attach it with the acceptance. Either of those 2 ways work. If you rent to a relative at a market rate, but you pay for all the utilities, when you raise the rent to the next tenant, do you have to minus the expenses amount that you paid, raising the rent up to 10% cap? I don't know exactly. The rent cap does not discuss utilities. It simply discusses rent. You're not required to give people copies of previous leases. If you've got a new tenant, you can charge the market rate and you could change who pays for what. You can change all that. All right. So that's the backup offer addendum. And then there's a place here when the first one is falling apart that they can cancel and release it. The seller signs. Then the buyer says, yeah, I got it. And the buyer signs, and there we go. Short sales, haven't seen these in a while. Whether or not it's going to come soon, I'm not sure. I doubt it. But for those of you who don't know what a short sale is, even in this hot weather, right? You'd think that short sales would be, well, never mind, it's not it. So a short sale is when the owner of the property owes more money than the property is worth. And so this used to be a really big thing, right? A long time ago, because we had a lot of short sales. I've been involved in way too many. And the issue with the short sale is that it's not up to the seller whether or not the offer is going to be accepted. It's up to the lender, because the lender is going to come up short. The lender is not going to get enough money in order to pay off the loan. Now, so if you were writing an offer on a property where it looked like they owe more money than you're offering, you would need the short sale addendum. Can buyers still negotiate price once a backup offer is accepted? The answer is no. Not really, but Michelle, they could back out at any time. Right? They could revoke their backup offer at any time, up until the other offer has fallen apart and they've got the cancellation, and they've up until that moment of communication of the cancellation of the other offer, the buyer could back out. So there isn't you could send them an amendment, right? And say, if you don't agree to this, we're going to back out. You could do that. So in a sense, you can negotiate it, but within the construct of the contract itself, there is no wiggling around. You'd have to amend it, right? And say, I'm going to revoke if you don't agree. Short sale approval, 45 days. Don't write in a shorter number unless you know something. Because what the problem with buyer's agents and short sales is that this is not up to the seller. The seller doesn't get to decide these things, the lender does. And even though you can say, I want the lender to tell me whether or not they're going to accept my price in 10 days, lenders don't act like that, right? You understand, this is a room in the Midwest someplace, some person is sitting in a windowless room, and they're just doing what they're doing. They're not going to speed up, they're not going to slow down. Right now, sometimes it doesn't take that long, but could it take 45 days for the lender to approve your short sale? The answer is yeah, absolutely. It could take that long. But so I would leave it. You could change the dates, but the lender isn't going to care what you write in. If buyer or seller cancel the agreement prior to the contingency date, that party may be in agreement unless it's pursuant to some other paragraph. So the short sale addendum doesn't basically say we all have 45 days to think about it. This is a firm offer. And if you have an inspection contingency and you find something you don't like, you can back out for that. But you can't just say, well, it's taking, it's been 30 days and we're bored and we'd like to buy something else, so we're out, right? Short sale lenders' consent means that all short sale lenders, sometimes there's more than one, shall collectively agree to reduce their loan balances by an amount sufficient to permit the proceeds of the sale of the property to pay the balances in the existing. Anyhow, everybody's got to agree to take less so that they can sell the property and deliver clear title. There's more about this. I'm not going to spend a lot of time. If you're on my team or in my group, I have a lot of experience with short sales, REOs, and things like that, which I was hoping never to have to use again. But here we go. Court confirmation addendum. Court confirmation could be in probate. It could be if there's a receivership or a conservatorship or something like that, where there is a requirement that the court bless the transaction, that this is the addendum you would use. And you would put in, the agreement is contingent upon on or before, you'd put in a date, because sometimes it could go on for a long time, right? And here's sort of the list of what it's typical: conservatorship, probates, guardianships, receiverships, bankruptcies, divorce. So if there is court confirmation, you might want, and you're writing an offer, and the offer, you might not want to go on for a year while they're looking for court confirmation. You can write in another date. Where's the fun one? Buyer's intent to exchange addendum. This isn't necessarily the fun one. And seller's intent to exchange addendum. These are important documents to include, particularly the seller intent to exchange addendum. So if you represent a seller and the seller is using the property in a 1031 exchange, you want to make sure, you want to, first of all, put it in the MLS, put it in the private remarks, and among the documents that you're going to want the buyer to sign is going to be the seller's intent to exchange addendum. And the part of this that is important is the part that says cooperation. Buyer agrees to cooperate. Right? And then I'll go through this in a second. The reason the cooperation is so important, this doesn't happen often, but we had a client representing the seller, and it was an agent that I was working with, represented the seller, and the buyer in the middle of the transaction finds some problems with the property. The lot size seems to be off from what the county records say. The lot size, it seems that the lot is smaller. So the buyer says to the seller, this isn't fair. The lot isn't as big as you said it was. We want $11,000, right, as a credit because the lot is not as big as we thought. Seller, there is no contingencies. Seller said, no, right? A deal's a deal, right? You don't have any contingencies. We're not obligated to do anything. If you don't want to buy the house, you can take your deposit and leave. You're not giving anything, nothing. Right? You know, actually, you're going to lose your deposit because you removed all your contingencies. We got you. We got you. Now, the listing agent, however, had not included this form among the documents for the buyer to sign. The listing agent had said in the MLS that it's a 1031 exchange, but never bothered to actually include the form in the transaction. Never bothered to include the form. So what's happening is the buyer has now been sent a whole bunch of documents to sign, including the papers that would allow the seller to do the 1031 exchange. The buyer is not happy with the seller. And so the buyer says to his agent, do I have to sign these forms? The ones that allow the seller to do a 1031 exchange? Do I have to sign these forms? And the agent said, no. No, as a matter of fact, you don't have to sign the forms. Now, it's true that it doesn't cost the buyer anything to sign the forms, other than to sign the forms, but you see, the buyer wasn't happy with the seller at this point. You think it's possible that you might have a transaction where the buyer and the seller are not happy with each other by the time escrow is closing. And if you're representing, this is malpractice. If you represent a seller and the seller is doing a 1031 exchange and you do not get the signatures on this form, that's malpractice, because what happened in that case is the seller ended up suing their listing agent because they ended up having to pay capital gains tax on that property because they couldn't do a 1031 exchange because the buyer wouldn't cooperate. And the reason the buyer didn't cooperate is because this form was never included in the signature packet to be signed. Just saying. Now, could it work the other way around where you're going to want the seller to sign some documents? There aren't very many for the seller to sign for the 1031 exchange, but if the buyer is doing it, go ahead and throw it in. Failure of the exchange. Usually we just leave it this way, where it says this transaction shall close without extension of time for closing, right? We're just going to close. but you could check boxes that say, if we can't do this within a certain period of time, we're not going to sell because we're not going to be able to do the other leg of the exchange. All right. Extension of time addendum. If you want to change, when is the close of escrow date? When is the contingency where, by the way, whenever something happens that throws your timeline off, you need this form. This is my opinion, right? Rather than just saying to each other, well, we'll close then on, October 12th, rather than just saying that, put it in the form. And if for some reason there's a reason that the buyer's deposit's not going in and the buyer is behind a step and you need more time for other contingencies, use the form. Use the form. I'm just saying. Additional signature addendum. I hate this form personally because I've had too many clients where there was like 5 buyers and 4 sellers, and it's just a pain, right? It's just a pain. But sometimes you have more than 2 buyers and more than 2 sellers. To begin with, notice it says this form is not an assignment. So where I see this being a problem is sometimes, you've got 2 buyers or 1 buyer, and then later in the transaction, you want to add another buyer, right? Because for qualification purposes or whatever, so somebody says, well, I'll just have them sign the additional signature addendum. That's not going to work, because what you really need is an assignment, which I'm going to talk about in a minute. But notice it says this should not be used to add new parties to a contract after it's been formed. This is used when you have more than 2 buyers or more than 2 sellers. So usually it's the purchase agreement. It could be the listing agreement. You would check who the buyer and seller, who they are. And then additional signer. So what we would be doing is, let's say in this between, let's say there are 4 buyers. 2 of them have already signed their residential purchase agreement. There are 2 more. Right, so what we would do is we're going to write in, so between, let's say the seller's name is, can I do this here? This is the name of seller, and we would check the box and names of all buyers, right? And we would check the box. And then what we're going to do is, and by the way, so if there's 4, right now, all of the buyers that have already signed go up there. Let me do this better. How about that? A little bit better. And then additional signature, let's say it's a buyer, and we would put buyer number 3. The buy would be, let's say buyer number 3 is a trust or an LLC. And so we would put in the name of the trust as the buyer, and then the representative person we would be putting in there. And if there would be a title, if not, we leave it blank, right? You understand? Don't put anything in buy if they're not an entity. And then liquidated damages and arbitration and mediation, they have to initial here that they agree or do not agree. And then that would be, if you have another one, this would be buyer 4. And again, agree, liquidated damage. If they don't, there is no liquidated damages. You could do another one. If you've got more than 3 in addition to the 2, you need a second one of these forms, right? But it's a pain. Does that make sense? So this would be buyer 1, buyer 2. Maybe I should just do this. Buyer 1 and 2, buyer 3, buyer 4. Everybody initials, everything signs. Now, this might not seem like such a complicated thing after all, really, right? Because you check the box, put in those names, sign, easy peasy. What about all the disclosures? What about the transfer disclosure statement, the real property, the seller property questionnaire, the market conditions advisory, the wire fraud? Well, what about all those things? What about the termite report and the prelim and all that other kind of stuff? Well, what your buyers are going to have to do, this is number 3 and number 4, is they're going to have to also sign all those forms. And sometimes we don't have room because some of them only have 2 signature spots. And notice this only gives us the choice between the RPA or whatever. We could do a bunch of others, but usually we just drop in signatures someplace where there's enough blank space for them to fit. What if one of the buyers does not want to agree? If everybody doesn't agree to liquidated damages or mediation and arbitration, you don't have it. And if you don't agree, then that would make it less likely that the seller may accept your offer. So what would we use if we're actually adding or changing the parties? That's an assignment of agreement addendum. Now, what's changed from the old contract to the new wording is that the old contract said that you needed the seller's permission to assign to anyone. The new contract doesn't say that. What it says, and this is, of course, in paragraph 23, there's a big paragraph here about assignment. And what it says, 23, I know it's here, 23, it says, buyer shall have the right, here, let me get my little spotlight. Buyer shall have the right to assign all of buyer's interests in this agreement to buyer's own trust or to any wholly owned entity of buyer that is in existence at the time of such assignment. So buyer has an LLC, buyer has a trust, they better get it going because we have a certain amount of time in order to do the assignment. How much time do we have to do the assignment? I don't know. It's the default setting is 17 days. Otherwise, it says buyer shall not assign all or any part of buyer's interest in this agreement without having first obtained the separate written consent of seller to a specific assignee. Such consent shall not be unreasonably withheld. Well, let's just go back to this form. All right. So here, I'll point this out since we're doing assignment. In the grid, everything is in the grid. Here we go. I'm usually quicker at finding these things. Assignment request. Everybody see that? Paragraph K, default setting is 17 days. So if you're going to make an assignment request, you have to do it within 17 days. Right? If you're doing it to your own trust or LLC, you don't need the seller's permission if you're doing it to somebody else. So I see agents still writing in name of buyer, comma, or assignee, thinking that that's now giving them the right to do whatever they want to. It's not that easy, right? Because the contract has that other paragraph. All right, here, let me just see, how am I doing in time? Oh, okay, good. So what are the different kinds of assignments? Most of the time, we're doing a partial assignment, which is adding a buyer, right? That's what I see most of the time. Right, and so you would check that box, partial assignment, adding a buyer. Buyer is adding the assignee's name below to the agreement and granting to such assignees a partial interest. So we're not changing, we're adding. This usually has to do with loan qualification, right? They need to add somebody, or somebody, that was investor has dropped out. B, total assignment, new buyer or deleting a buyer. This is what you would do if you were written the offer in the names of a person and you want completely different people to take over, right? Or D, assignee is buyer's own trust or wholly owned entity, right? So partial means we're just adding somebody. Total means we're replacing the buyers. And D, 1D says we're just putting it in our trust or our LLC because we want to. Prior documents, assignee shall initial the first page of each document and deliver to seller all of the transaction documents previously approved by buyer. Termite inspection, property inspection, transfer disclosure statement, Southern property questionnaire, wire fraud advisory, market conditions advisory, all of that stuff, right? All of that stuff within the time period specified below. Unless otherwise agreed, assignee acknowledges that all time frames remain the same and no additional time shall be provided for any matter. Right. So if you've got a 17-day inspection contingency and it's day 16 and you're assigning it, the assignee doesn't say, well, wait a second, I want a couple of weeks to think about this. So have those documents. This is what you should be. This is the default setting, is by the time you're writing the assignment, it would be way better that you've already turned all this over to the assignee and gotten their signatures and approval on everything, so you're not hassling it in the middle of the escrow. If you haven't done that, then you check this box, which is, if I'm the listing agent, makes me feel less, happy, because the assignee hasn't even seen all this stuff, and maybe they're not going to like it. This is an important part. Let's say the buyers provided proof of funds and a pre-approval letter, but now it's a trust, it's an LLC, or it's different buyers. You need a new pre-approval letter. You need a new pre-approval letter that says the names of the people that are buying. Notice it says this requirement applies even if 1D is checked. 1D is assigning it to your own trust or entity, because might it affect the lender's willingness to make the loan, whether or not the loan is being made to John and Mary, or whether or not it's being made to the JM LLC. It might. And what would be way better, and is the default setting, is that you've given the assignee all of the documents, they've signed everything, and you're giving it to the listing agent all together. If they don't do this, sign everything and turn it in, then the assignment can be canceled. To be clear, the contract isn't canceled if just the assignment gets canceled, right? If the assignee doesn't sign everything and get everything back, then the assignment is canceled, but you're still in contract. You can still lose your deposit if you backed out. Now, buyer has received consideration in the amount of, so wholesaling, bird dogging, all of that sort of stuff, where somebody says, I'll give you 10, go get them into contract, I'll give you money. You are required by the contract to disclose whether or not the assignee is paying you anything. And by the way, sometimes sellers don't like that. Right, that their contract is, this is sometimes called contract flipping, right? That their contract is being flipped. They don't like that. But if it's being flipped and you're getting paid, you're supposed to put that in. Or most of the time that we're dealing with it, we're talking about LLCs and trusts and adding a relative for purposes of qualification. Other terms, if you're writing stuff there, you're probably doing something wrong. Everybody signs it. Notice this even has an assignment not accepted. Now, it says in the contract the seller is supposed to use good faith, and they're not supposed to unreasonably prevent you from assigning. But if they don't sign this, then it isn't going to be assigned, right? If they don't sign it. All right. Well, was that enough addendums to keep you going for at least one day? I hope so, because you warned me out with talking about all of this stuff. So what I'm probably going to be doing is I'm going to go through the probate and the mobile home and some of those other fun ones that you're more likely to see as a real estate agent. Probate would be a whole class all on its own probably. And if there's any special topics that you're interested in, feel free to drop me a line. Otherwise, thank you, everybody. Stay cool out there. Bye.